Hello everybody, my name is John DeVette from Vespa Capital. Today I'd just like to talk you through one of the key tools that we use when we're looking at the macro picture, how to kind of balance the portfolio in our fund model, and also whether there are any asymmetrical opportunities in kind of other asset classes or from some of the news flow that's coming out. It really has become one of the cornerstone tools that we use in the fund, but also that I use in my personal investing and personal news. So what is MetaStock XENITH? Well, it's essentially a key platform that most institutional and professional traders have access to in another form. Now, if you've heard of the Bloomberg Terminal or Reuters Eikon Terminal, okay, you'll know that these terminals cost between kind of $3,000-4,000 US a month for the very base model. Now, MetaStock have very kindly rebranded through a partnership with Reuters and allowed retail investors actually access to some of the key tools. It is essentially the Reuters Eikon Terminal, okay, rebranded as MetaStock XENITH. And you can essentially have this for under $1,000 a year, which is absolutely incredible. And I must say, for retail investors, for people who are really interested in getting a much deeper knowledge in the markets and of the world around them, this is actually absolutely a fantastic tool. So I'll just start walking through it after I've introduced you to Vespa Capital. Vespa Capital is a fund-of-fund model. We essentially have brought on some of the best trading teams in the world, pre-vetted by ourselves and some of our key risk partners. These guys have had outstanding risk-adjusted returns over the years, and the idea is we bring them into a portfolio so that they all diversify themselves and essentially bring an all-weather fund that can go long and short in various markets. We're primarily based in FX, but we do take on other trading teams if the opportunity is there and the diversification is present. If you're interested at all, fire us a line. We'd love to hear from you. We're an incubator fund until March 2017. From there, we'll be launching as a fully fledged fund. So hopefully you keep in touch with us. But without further ado, let's have a look. Okay, so basically MetaStock opens like this. This is a personal workspace of mine. Now, as you can see, I'm an absolute tab warrior, which is not necessarily the best way to kind of run this system, but it's fully customizable. Here on the first page, we've got our news page, okay? And this is the first thing I open for the day, okay? Today we've got Italy's Renzi and the referendum that's going on. So there's a lot of volatility in the markets. As a fund, we've actually hedged all our euro positions, particularly because I think there's going to be a lot of volatility today. But this is basically news on the front page, right? But then we can delve into deeper news, right? So we can look into Eurozone, what the central banks are doing. Let's have a look here. Okay, we're talking about Greek debt. We had the US non-farm payrolls employment report on Friday. Whilst the jobless rate fell to a 9-year low, we didn't see the kind of wage inflation they were looking for. So there's a little bit of backwards and forwards activity. You've also got Reuters Insider, okay, that has news flow in media form.
So we know that the referendum was technically on constitutional reforms, but the Italian government linked the vote to its own political future.
Okay.
So if they
you can see here you've got a whole range of kind of news flow that you can access in that sense as well. Market snapshot for the US dollar and Brent crude, which I'm following at the moment given all the OPEC stuff. You can then look to breaking views. Okay, this is more opinion pieces. We've got investment banking, we've got commodity markets. Let's check out what commodities are doing. There's output. Okay, so we've got the oil story going on. There is really so much here, but it is cutting edge, up to the minute stuff. The moment that news flows out, Reuters obviously being one of the most premier news services in the world, particularly in finance, but also in other areas, it comes straight through. And I'll show you how we actually pick up breaking news in a second. Now, what is our kind of primary focus most of the time? It's FX, right? So we're looking at, the news that's just come up. Dollar tanks as US jobs cast out and pace future rate hikes. Okay, they were talking about the wage inflation story. Sterling post best run versus euro in 9 months as hard Brexit fears ease. So there really is just so much. I won't go too much deeper into it because there's a lot more I want to show you. Here I've got an equities tab. Okay, so it basically will give me a little overview of what the equity markets are doing over the last 2 days. All right, and you can see there's a little bit of backwards and forwards. It's a Monday morning here in Australia time. So these last 2 days were Thursday, Friday last week to the New York close. And you can see there's a little bit of backwards and forwards and a little bit of resurgence in some of the markets. Mind you, the S&P didn't do much after the non-farm payrolls. There's also news, okay, it'll give you equities news, and then market data and tools. My internet's been a little slow today, so I won't get too deep into that. Then we move into the market tab, okay, so what I've actually built here is a couple of workflows. Now you can actually disconnect these and create your own tabs, right? Just depending on what data is important to you. But for me, as a kind of portfolio manager, this is what I do. I get on here, I look at the kind of news flow we've got coming up. So this is US and Eurozone, G7 and Eurozone news. Now, particularly important when we've got big data coming out, okay? So as an example, let's have a look at the private payrolls, right? If we've got this coming out, you can do all kinds of studies, right? So look at what the polls from the major economists have been saying, what the mean, the mode is, standard deviation, can give you an idea of where price could potentially reach to, can give you an idea of what previous payrolls have done. I'll just show you there actually, if we bring that up. So I'm right clicking here on payrolls and we'll get an overview of the report itself as an example. Now you can go way more deeper than this, but I just want to give you more of an overview and not create an hour-long video here. So here we have, just stretch that out. Okay, non-farm payroll report, okay, dating back to December 2014. We can actually bring that back even further. Now this was the actual number, okay, the report we're looking at in the yellow, and then the blue line, if you can see that, that's what the Reuters poll was. Now, Reuters and Bloomberg, I've actually looked in between the two polls. They're very, very similar in terms of what's expected in the market. So obviously when you get deviation from expectation, that's when you get the biggest price moves. What I find in FX, and this is one of my personal trading strategies, when we've got a smaller deviation, quite often you'll get a fade move, where price goes one way and then moves the other. What else is quite interesting here is you've got a smart estimate. If you see there in the purple, actually I'll highlight it up here, smart estimate. Okay, that takes into account the best economists in terms of their strike rate and gives you what Reuters are estimating the data to come out at. Take it as you will. I generally look at the actual numbers and trade after the number, rather than ever trading before. But again, this is a great risk management tool to see what's expected and as it comes out, whether there's going to be volatility in the market or where we expect price to reach to. We've got what the currency is doing in the FX spot market. You can see, yeehaw, everything is down today, except for the US dollar, right? So this is, we're seeing quite a bit of risk in the market. With the Italian referendum and the kind of stuff that's going on. So strength in the US dollar, and you can also see here we're seeing strength in the Japanese yen to an extent, primarily because these are down, but I mean, this is telling a story. We can actually look at the charts, but let's just look at economic events. Basically, what this actually allows you to do is pick a specific political event. We've just had an update of the system, so I think they've changed the layout a little, but say we wanted to see we wanted to trade the CPI numbers, which is the Turkey CPI numbers, right? we could click on this, get an overview of what the CPI numbers have been in the past, what the smart estimate is, just like we saw non-farm payrolls. Now, just before this is going to come out, okay, the countdown time will start. It'll give you in real time the Reuters, what the Reuters poll is, and then as it comes out, it'll give you the surprise, and whether there are any revisions from the last economic data report. So very powerful if you're a news trader, very powerful if you want up to the date, up to the minute, up to the second, really, news flow. Again, some of the layout's been changed, but it is a very, very powerful tool. Again, we're still in economics. This can give you a whole background of what the numbers have been in a not so friendly layout. I don't usually use this one, I much prefer the other, but you can click on any of the indicators and it will then automatically bring up news of that indicator. So we're bringing up Brazil industrial output. Here the trending output numbers are since 2011, and over here we've got news from Brazil. And the news story that was associated with that economic data piece. Again, just great stuff for having the ability to go through and see what's happened in the markets, what's happened previously, and what the overall trends are. Now, just getting to our charting, right? So I'm always watching this. This is important stuff for our fund. These are the majors, okay, hourly charts. And this is giving you an overall kind of trend and correlation of the major currency pairs. So here you've got Aussie dollar, Kiwi, dollar yen, euro dollar, sterling, and dollar CAD, all right? So obviously if we're seeing correlation between the Aussie and the Kiwi and the euro and sterling, we could say with a reasonable amount of certainty that that's a dollar move, okay? If you're seeing correlation between the Aussie and the Kiwi and it's diverging from the euro sterling, that could be an Asia Pacific move, or it could be a commodities move, or it could be a risk on, risk off move, okay? But this gives you a really good correlatory view of what's happening in the major pairs. And then obviously this has full charting capability, so we'll zoom out here. You can see the Aussie's kind of been on a downtrend now, and we're just seeing a little bit of resurgence, given a whole range of factors, but obviously record low interest rates. Some of the data recently hasn't been so good, but primarily this move has been on interest rate expectations from the Fed. You've got all your major analysis options here: momentum, MACD, relative strength, all the good stuff. So easy to use. I'll just scroll across because here we've only got our workspace, but what I've also set up is Euro crosses. Okay, Euro pound, Euro yen, Euro Aussie, Euro Swiss. Okay, so what's the euro doing? A lot of volatility, right? Given the current Italian election referendum. Now, where's the most volatility? Well, primarily in the eurozone, but also in euro yen, given that the yen is a risk on, risk off currency, and there'll be a lot of deleveraging out of and into carry trades based on perceptions on the eurozone stability on this referendum. So it gives a good overview. We've also got major news here on the side. What I also use here, which I think is quite interesting, is volatility. Okay, so if you recognize this chart, it's essentially currency volatility, right? And you can guess that yellow line is options volatility around different currency pairs. What do you think happened here? October 6th, that's the sterling move that we saw on kind of Brexit and post-Brexit woes. So you can see it's quite useful to see what's expected in the options market, which can quite often feed into the spot market. Now moving on, what do we have here? Okay, more indicator polls. So this can actually tell you what is what the overall economists are looking at in terms of the economic data coming out. So here we've got the federal budget. What are they expecting? Well, Reuters poll is about negative 80 billion. Prior was 33 billion. The actual, so it's already come out, was negative 44 billion. Okay, here's the deviation from the estimate versus the actual. And you can actually look at individual contributors, right? And just plot those. So say BHF Bank has a really good US Fed monetary department, that has great forecasts, and you really want to know what some of the key analysts are saying on this particular data report. Well, here you can see what their previous numbers were. They've been pretty close a lot of the time, actually, and you can chart that without a problem. Here the summary is, okay, what was the poll, what was the estimate, what was the actual, and what was the prior. So we've obviously got a downtrend in the kind of balance sheet here in the Fed. Just moving on, here we've got another window that is basically my equities window, right? So I've double click here. This is the S&P 500. Obviously we've seen that massive uptrend, top size squeeze. How long is that going to last? I've been saying that since about here. I really don't think we're going to see too much more upside in the equity markets, particularly with some of the risk coming out of China, what's going on in Italy, what's going on in Deutsche Bank, okay, some of the sovereign debt woes we're looking at the moment, plus the cost of holding US dollars US debt is going to be more and more expensive as the Fed raises. So I really kind of think that we are going to see a bit of a kind of downside rally at some point in the S&P, which will probably lead into other equity markets. You've also got treasuries, so let's pull up the US 2-year. Okay, zoom in there a little bit. Right, so this is the US 2-year treasury yield. Okay, if we're looking here. So obviously we've seen yield expectations increase, okay, given the data leading up to the US Fed announcement. Now fully priced in almost is they're going to raise in December. Okay, I see this as potential for a downside move if there's anything that kind of shifts that view even slightly. We're kind of sitting at at highs since 2010. Which is post financial crisis. We've also got kind of major times and news around that. So we've got a whole bunch of individual currency pair charts and news here. I'll just move over to one of my favorite themes, which is essentially how much risk is priced into the market. Okay. Risk, more and more so, is being one of the primary drivers of the market. Built into that is this search for yield. Okay, obviously investment banks, okay, big players, hedge funds are needing to take on more risk, as well as personal investors are needing to take on more risk to generate the yields that we've seen in the past. However, global growth is at all-time lows or getting down to all-time lows. With some of the risk moves and risk profiles we've got in the emerging markets, in China, in some of the stuff that's going on, we really feel that this theme, particularly when you look at the kind of middle mini bubbles that are going on in the FX market, especially, this risk theme is something you really need to keep an eye on. So here, what we've charted is let me blow it up here. It's the VIX. Okay, you'll see this yellow line. For those who follow the VIX, which is a measure of options volatility, equities options volatility, this gives you a really good indicator of risk. Now, a lot of the other volatility measures actually follow this. We've got oil volatility, gold volatility, okay, which I must say is upside and downside gold volatility, I believe, and also an aggregate of volatility. Now, when you see these volatility measures spike, okay, that quite often means that there's a perception of risk in the markets. And the fallen effect of that can be, purchasing bonds. It can be deleveraging out of short yen positions, etc., etc. So again, giving you that nice thematic approach. Down here, I've got a singular VIX chart. I do just keep an eye on this, particularly when there's big stuff coming along. Again, it amazes me the complacency in the markets. Given what's going on in Italy this weekend, you'd think that more people would be hedging some of the equity positions, but no, not too interested at this stage. Here we've got the overall commodity story, which is a little mixed given the kind of stuff that's going on in OPEC. This rally has been the supply story around oil. The CR-BIX is an aggregate commodities index, okay? Heavily influenced by risk, okay? So when risk is on, that's generally rising. Risk off, we see that fall. That's also heavily reliant on inflationary pressures, particularly in countries that rely on the commodity inflation story. But again, it's just giving us that nice overall picture. Now the green one, this is gold. Okay, so gold has just been kind of rallying. It's interesting with we're seeing a bit of risk on, but we're not seeing a decline in. With risk on, we're seeing an increase in the gold price, which is counterintuitive. We're definitely seeing a decoupling of the gold story, and I think a large part of that idea that gold's a safe haven has been very much driven by an old environment that had significant yield. You could put your money in an Aussie bank account and earn 8%, not that long ago. So when it looked like that we were going to see asset prices fall, you could happily sit in a non-yielding product whilst you wait to get back in the market. But now yields are so low, I don't think we're seeing gold as an option for many of the players. If they're going to move their money, they'll move it into something that at least has some yield, whether it be US Treasuries or US dollars in the cash market. Or they simply take on more risk, which is why we're seeing lower VIX volatility leading into events like this. Will that last? No. I think the market's dynamic. And people have many different. There are so many different players, okay, that are driving these kind of movements and decisions. I think ultimately, there will be a shock of some description, okay, particularly given the context we're in at the moment, that will drive this back in some of the oil correlations. The gold story, who knows, but again, this is a great tool to kind of keep an eye on it. And up here we've got emerging markets. What have the emerging markets been doing? This one looks like it's been on the way down. I'll be honest, I think that is. Let's see what that actually is. Sovereign bond, okay. Emerging market sovereign bonds. And that is the price of sovereign bonds, okay? So people are getting out of high yielding emerging market sovereign bonds, okay? They're selling off. Now, this is interesting, okay, because we're seeing a divergence here. Now, this is one of the big things we look for, okay? Not much volatility going on in the VIX, okay? The S&P 500 is still rallying, yet the more sensitive risk measures, such as emerging markets, are seeing a fall. Now, could that be an initial trigger for a move? Potentially, are there other things going on? Well, yes, that a large part of this could be driven by, say, the Mexican peso and the volatility over the election, the US election. So there's a few things in place, but again, it's giving us this kind of broad story. What I do want to show you, one last thing, is rebasing, right? This is interesting. One of my favorite tools. You throw in here instruments. Now that can be FX, it can be equities, it can be stocks, it can be a whole range of things. And basically what it will do, you pick a date and it will set all the values at 0. And then you can see how each move relative to each other based on that date. It gives you it's a great thing to do on a weekly basis. Right, on Monday, if all the currencies were zeroed here, who's been the best performer for the week? Who's been the worst performer? And you can actually write notes and say, okay, what's actually driven this, etc., etc. At the moment, we've got 2 days, so this is leading into last week. You'll see these spikes were from 11 Melbourne time, which is plus 11 UTC, right? Okay, so that's essentially non-farm payrolls. So that's the volatility around the non-farm payrolls. You can see how that kind of has recentered the currency since earlier in the week. If we go to the 1 day, because it's a Monday, we don't actually have much data, but we can then even bring that out to 6 months. 0 to 6 months ago, the top performing currency has been, have a guess, US dollar index. Okay. Worst performing currency, I think you can also guess that. Let's just kind of bring that up now. Okay, worst performing currency has been, it'd have to be sterling. Yeah, here it is, sterling down here. So all this divergence, and based on how you trade or the kind of data you use, or if you're an analyst, you'd be asking, well, have we seen the end, or is it going to keep going? Potentially with a bit of risk on post-Italy, clean up of the Deutsche Bank crisis, and maybe some good data out of China, plus a normalizing of the Fed, we might see sterling start to rally along with, the soft Brexit and easy landing news that could be coming out over the next few weeks, right? So this is all great stuff to make trading decisions. By the way, I think I can actually send you my workspace if anyone is interested. Now, okay, we've actually got, I can move this over. I'm now going to bring up macro. Okay, so I've got a tab called macro. It brings up new things here. So macro is a really nice overview of how countries are doing. Okay, so I've been looking at Japan recently. Let's look at the US. Right, so S&P 500, what the latest on the S&P is. You've got stuff like the floating currency, what the government type is. Nice macro overview, great for emerging markets, for stuff that you may or may not be totally versed on. Barack Obama's still president. We're just waiting for the changeover over the next few months. What the latest news is out of the States. Primarily financial news, but you can actually get news here that is non-financial. You just have to put in the code. Here are the markets. Fed funds target rate, we've got the 2-year benchmark, bond yields, 5-year benchmark, bond yields, 10-year benchmark, we've got sovereign CDS, 5-year sovereign CDS, 10-year CDS, we've got the FOMC rate decision. Now that'll be coming up in December, so that'll populate when it comes up what the major currencies are doing against the US dollar. You can then scroll across to major news. Got financial markets. Okay, and we can even go all the way over here to the latest economic expectations and major events that are expecting to come out. So again, just super, super powerful system here, and just you can take things into such a granular level. I can't actually show you what's on the other screen, but I might be able to just have a search here. So you've essentially got a search bar, I was interested in, okay, what's the Bitcoin market doing? Bitcoin. Right, it's going to bring up key links for Bitcoin. So let's look at the Bitcoin chart. Okay, Bitcoin US dollar. Here's what it's been doing. Now we can actually populate this into a chart that we can draw line studies on. We can actually chart how Bitcoin's been going against other asset classes, right? See if there's any correlations there. Let's actually do that out of interest. So if we wanted to bring up a new chart, I'm just on my other screen at the moment, so I'll pull that across. There we go, it's automatically populated. There's Bitcoin chart. Let's say we wanted to see what Bitcoin was doing against dollar yen. Maybe let's have a look here. Okay, we've just added that. And while we're here, let's also see what it does against the VIX. Basically, you can turn these into line charts and graph what's going on between them. So what story is this telling? Okay, we've got Bitcoin in the yellow here, essentially rising. Now that is dollar Bitcoin, okay, which is the pair. So that could be dollar driven, could be Bitcoin driven. We've got dollar yen, okay, here in the purple. Yep, okay, the dollar story. And then we've got the VIX, okay, so that was the recent spike in October. And here we're seeing the VIX down at its lows. So you can work this into a theme. You can also take on further analysis, which I do quite often actually, and look at correlation, okay? So what this will actually do is bring up a window. I generally, here we go, Bitcoin. So we'll look at the correlation between Bitcoin and dollar yen. And here this will simply open up a bar down the bottom, which will show us where the correlations have been great and where the correlations have broken down. Okay, so here we're seeing an increase in correlation between dollar Bitcoin and dollar yen. Okay, the dollar story, very, very powerful system. What else we have here in terms of macro themes? You've got almost any region in the world, and let's have a look down here in South Africa, which is where I'm originally from. Okay, and you can chart what's been going on in South Africa from just about any data point. Okay, you guys get the picture. I don't use this one very often, but if you're interested in this, just let me know, and I can run a webinar particularly on these macro kind of themes. But these days I don't use this as much as I use the specific FX stuff. This is quite interesting, sectors. What have the sectors been doing? Where are the biggest sectors? What's the market cap of each sector? What are the capital markets doing, etc., etc. And right now, this is looking at all sectors, okay. But we can change that universe to less, okay, and it'll look at what sectors are there. It's also looking at, this is global, I believe. It's in billions. But you can obviously focus in on countries and even states. Super, super powerful stuff. I used this a lot in the early days before it had before MetaStock actually had a revision of the system itself. But super powerful. Okay, I hope that's given you a bit of an overview. I'll come back to that in a sec. But again, we're Vespa Capital. Now, we actually get a deal with MetaStock that we're happy to pass on to you guys. Basically, you can get 3 months for the price of one. The 3 months to test MetaStock itself. And then from there, you can pay monthly. Now, FX only is $100 a month, US. However, we can also get you a deal where it's $950 US for the year, okay, if you buy an annual subscription. What's more, we have a deal that if you buy for an entire year, Vespa Capital will give you $100 US cash back. Okay, so I do believe it's the best deal out there. We really just want to raise the profile of MetaStock alongside Vespa. We think it's a great product. We use it daily, despite me not being totally over all of its functionality. But we do, I particularly use it for FX, and a lot of our trading teams do. So all the details are below in the YouTube video. Do let us know if you are interested in any of the workspaces. I'm happy to send those out if it's possible. Hopefully you keep in touch. Thanks again for watching, and speak to you soon.